Hello and welcome to the Bullish Money YouTube channel. Today we are going to talk about Reynolds American, which is ticker symbol RAI. Now, of course, this has been a big hot topic in the financial markets because of their merger with Lorillard, and that is going to bode very well fundamentally because it'll allow Reynolds, which has the Camel brand as one of its cigarette brands under its company division, it'll allow Reynolds to compete directly with Altria, which has the Marlboro brand cigarettes, and of course Marlboro is the most world-renowned cigarette brand, and so this will allow a more even playing field between Reynolds and Altria. The problem, though, is that most of the people that are looking at investing in Reynolds, they're only looking at that merger and the implications behind the merger. And I think there's so much more to be discussed here. And one of the things is the earnings reports, or the history of the earnings reports. So over the past 14 to 15 earnings reports, the shares, RAI shares, have gone up after the earnings release 92.9% of the time. The other thing we're going to talk about is the probabilities of the stock moving higher over the next 90-day period. And based on the current technical condition of the stock, which right now over the past 90 days, the average performance of Reynolds share is 3.72%. And since the history of the stock's IPO, about 87.5% of the time, when you encounter this similar technical conditions, the stock does have a tendency to rise higher over the next 90 days. So by July, we should see some higher price action movements with RAI stock. And we're talking about average gains of 11.64%. On the flip side, there's a 12.50% chance that the stock will move lower. And when it does, there's a risk of 4.71%. So, there is that aspect to consider, but what I like about Reynolds is that the reward potential is far greater in magnitude than the risk potential. So this is another aspect to consider. And then also you look at the long-term technical trend, which this company, the shares are basically, it's like a momentum trade. They continue to build off of positive momentum. Right now, there's nothing to really indicate that people are getting bearish on Reynolds. And certainly the historical probability suggests that the stock will continue to move higher. I would say it's a pretty conservative play. It's a safe play. It's something to pick up on the dips when there's a market correction, either in the underlying indices or in the stock itself. If there is a correction, if the price action starts to muddle through some bearish price action, it actually might be a great time to pick up some shares, because people have been bearish on Reynolds before in the past. About last year, 2 years ago, we started to see some naysayers on Reynolds, and the naysayers have been proven wrong, and proven wrong in a pretty devastating manner. So this is one company that I think is going to be here for the long run. I wouldn't recommend betting against it, and this is something I think which has a long-term potential.